Just a quick comment on where sterling is right now.
We're bouncing, in a sense, in cable because of the dollar. We've had a very sharp step back in the dollar. So I think if you look at the sterling trade weighted on its own, and if you look at euro sterling, there is no change to the sterling sort of directional call. I mean, sterling is still under pressure. We think sterling in trade weighted terms completed a top back in June, and we still think the risk for sterling is lower. The bigger question, I think, here still is it lower that's a much more of a strategic sort of trend lower, or is it more of a tactical trend lower? And if you look at sterling, again, in sort of euro sterling and in trade weighted terms, this is a move higher in euro sterling, you move lower in trade weighted in the bigger range of the last sort of 2 years from 2016. And I think at the moment that's the way we treat it. We think there's more stress to come with sterling, a bit like the Italy story, but it's ultimately a buying opportunity. Long term on cable, you are historically, clearly extraordinarily low levels. I think our view is we've still got another leg lower to 126 in cable, but those levels are probably where we think that's where you start to look for the floor. So you're kind of in that finessing point of the sort of latter stages of the trend. I think clearly for cable, the dollar is a huge call in here, like it is for euro dollar. Is this setback in the dollar that we've seen, sharp as it is, still just a setback in a broader uptrend?
I'm looking at, David, a chart of the trade-weighted index, pound trade-weighted index here, which has some Fibonacci lines drawn on it. We've crashed through the first one, and we're looking at kind of a bounce off the second one right there. Talk me through this chart and why and how the Fibonacci levels are important for support.
Yes, I mean, I think two things from this chart of the trade weighted is, one, back in June we completed a top, and that's been the technical catalyst for this sort of steady decline lower, and that sort of went hand in hand with cable completing a top below sort of 130.5. So when we complete a top and we're looking at sort of what are the potential support levels, we are looking at a combination of just trying to define supports below, and one of those is Fibonacci levels. I think I wouldn't read so much extra into Fibonacci in terms of it's purely a Fibonacci level we should be only focusing on. We're looking to see, where are the Fibonacci retracement levels? Do they coincide with sort of price lows? Do they coincide with trend lines? Do they coincide with other levels? And what we're always looking for is those clusters of levels in terms of, do we have, if we have one reason why it's a support level for the sterling trade weighted, it may be interesting. If we have 4 or 5 reasons because it's a Fibonacci level, it's a low, it's an uptrend, then that's where it gets more interesting, and that's technically always what we're trying to do. And at the moment, they are useful to pinpoint sort of potential sort of stopping points on the way down. And I think what we also technically would overlay in here is how does the momentum story lay out? Is there a momentum divergence? There isn't. So there is no big momentum divergence on the sterling move. So I think at the moment it's just the Fibonacci's are sort of temporary stopping points on the way down to the lower end of this bigger range that you showed there on that chart.
What I know about technical analysis could be written on the back of a very small postage stamp, but that looks like a head and shoulders to me in euro dollar.
Yes, very much so, and that's something we've been very much focusing on and again highlighting. I think
that takes us down to 105.
The interesting here is if you could step back just a little bit on the chart,
okay.
You've got this sort of story of two big patterns. So can you see on the chart there, you've got the whole of the 2015-2017 range that we broke out of. You can argue that was a very big base for euro dollar, and that was the driver for that big move higher. So you've got this dynamic now. And if you look at this decline here, and if you could put the line connecting those highs from 15 and 17, you'd see that is exactly where we have stopped on euro dollar. I don't know whether you're able to sort of do that.
Well, so
connecting the big highs in sort of 15, 17.
Doing this live on television is not something you want to do. Let me just make that crystal clear, because we can come back to this.
Well,
I can make this happen.
Is we've held essentially the neckline to the big base. So you've got this dynamic. Is the big base?
So you want a line between?
Can you see that?
These tops here?
No.
We'll give it to Hillary.
Over here.
Why don't we give it to Hillary over the break?
Down. There?
No, much lower. The highs in 15, 17.
Oh, the highs are 15, 17. Okay, so here.
So there across to that next high.
Yeah, so we're there. Yeah, exactly.
If you have that sloping downward line that connects those highs, you'll see that's exactly where we've stopped at the moment on euro dollar on the way down. We do think there is a head and shoulders top in place. This bounce, actually, our house view has been to neutralize sort of euro dollar. We're turning neutral and actually use this bounce in euro dollar to basically go neutral on the move.